Welcome back to Switzer on Australia's business channel. With the local reporting season nearly done and dusted, what have been the standout results and which stocks missed the mark completely? Joining me with his controversial expert conclusions on earnings is Rudi Filapek-Vandyck from FNArena. Rudi, how are you, mate?
The viewers don't know, but I can actually see what you're reading, and it doesn't say controversial. You're just inserting that yourself.
Rudi, I'm not reading anything. It's just coming straight out of my brilliant, very big brain, mate.
I thought you were going to refer to Kevin Weld, who said, like, I haven't been briefed correctly. I didn't think I was not supposed to read.
Yeah, I don't worry about briefings. But Rudi, you've looked at the reporting season.
Yes, I looked at the share market, I looked at the reporting season.
Okay.
And
the big picture?
The big picture.
Yeah.
The average PE ratio for the share market right now is around 14.
14.
It's a little bit lower now because we're going a little bit down for a few days. Long-term average is 14.2.
14.2, long-term average. But of course, an average is made up of very high results and very low results.
That's true. But
what's the median figure?
Nobody cares about the median.
They should. I must actually.
The average is much more important.
Yeah, okay.
The average, but it shows you. See, why is that this important? We just started in 2014.
Yeah.
We're already at 14.
Yeah.
So at face value,
you're saying there's no potential, or there's not a lot of potential for lots of upside.
Unless, on average, yes. Unless you have to assume that the market will become expensive again, or
surprise earnings.
That's surprise.
What if the earnings become better because of low interest rates and low dollars, and because of a great new government with a big majority who helps business?
That assumes that none of that has been forecast by analysts.
But that's a kind. Yeah, but forget analysts. Like Treasury and Reserve Bank, they're going to be wrong. It's going to be a good year. 2004 is going to be good, Rudi.
For whom?
Take it from me.
For whom?
For anyone who lives in this economy.
We're already up double digits, Peter.
No, but the economy is going to be better, the stock market's going to be better, Europe's going to be better, Japan's going to be better, everything's going to be better. Anyway, tell me where I'm wrong.
See what sticks.
Tell me where I'm wrong.
Well, I think, well, it's my observation anyway, a lot of the stocks that may have growth ahead of them.
Yep.
It's priced in, basically.
Yeah.
I mean, you will find, especially
the retailers they've zipped ahead.
The large caps, yes. Most of the large caps, I would argue that if you buy them today at today's prices, you better not have too high expectations about immediate returns in the immediate future, because a lot of it is priced in.
Yeah.
I wouldn't say that they're all expensive, but I would say fair value is probably a good term.
Yeah.
And
BHP 35, fair value.
I wouldn't use cheap for many of them.
No, okay.
And especially the ones that have performed very well. I mean, the 30% that's done all the work, a lot of them may not necessarily have a lot of potential for them in the 6 to 12 months horizon.
Name names now. The ones that did badly, who you think we might forget, or maybe is it time to get onto them, and the ones you liked.
Well, you mean purely on the results? Well, a lot of the large caps are actually quite disappointed. I mean, that includes the Rios, the BHPs, the Woodsides. I mean, they weren't really shooting the lights out. But obviously, investing in those stocks is more about the macroeconomic picture. What are the resources prices doing? What is the dollar doing? And so forth. If I look at the share market right now, I do think that investors have to be careful in going on the proven winners, because a lot of them have been are pretty high multiples.
Yes. Yeah, you got banks, Telstra,
even
Diversified
even
Financials,
the likes of REA Group, Invocare, Ansell. I mean, it's pretty high multiples. Even Amcor, pretty high multiples now.
All your raincoat stocks, all-weather stocks.
My all-weather stocks. Most of them are pretty high now, and a lot of the other ones as well. On the other end, you have the let's call them the smaller miners, energy stocks. Yeah. But they're extremely volatile.
Yeah.
Right? To give you one example as well. UBS analysts this morning, or was it yesterday? This morning, I think, again reiterated their view that they still believe there's a massive correction coming, probably in iron ore, either in September or in October.
Commodity price correction?
Well, if the correction in iron ore price happens, then obviously it will also happen in the share prices of iron ore producers. But they believe it will create a buying opportunity, because after that it'll pick up again. Okay. But that's just as an example of the potential volatility that can occur.
But UBS has been running this argument for a while, haven't they?
They have, and that's why they reiterated now.
So they've been wrong?
No, they've been saying Q3, and that's Q3 is the main.
Okay, so they weren't saying avoid BHP and Rio when BHP was 30, and some people in this program
No, I said
we're negative on BHP.
Is that well? Yes, I've said BHP you buy at dividend support of 4%.
Yeah.
Which was $31.
Yeah.
That's exactly what I said.
Yeah.
Right? Now the dividend support of BHP is where it is right now.
Yeah.
Because of the dollar. Right? So it's a dividend stock.
Yeah.
I've been saying that all along.
Okay, good. Yeah, I wasn't actually talking about you. I was talking about somebody else. As a matter of fact. Good to see you. You got a bit of a guilt.
And before that, I was negative on BHP, and I think when it goes from 49 to 30, I think I'm not negative. I'm correct.
But you weren't negative on BHP when it was 49.
Oh, definitely I was.
Well, not this show. It must be with some of my colleagues.
I was negative when it was 37 as well, and all the prices that on the way to 30.
Yeah.
Anyway.
Yeah.
When I look at the share market, I mean, either investors have now, because the stocks I don't like, for instance, are the building ones. I mean, I think there's too much price.
Boral, no good?
Oh, no, absolutely.
Disappointing stock, isn't it, Boral?
Well, yes, but too much. Can you believe it was $5 a few months ago? People priced so much in.
Well, I thought it was going to come good. America was coming good. I thought Boral would come good.
Yes, you price the heaven in front, and then nothing comes then.
Yeah.
If I look at the share market, I think probably the best returns are probably amongst the smaller caps. Which have some of them have quite a lot of growth in them, and it's not necessarily priced in yet.
Name names. There are people out there who watch this show for investment ideas.
Okay, I think what came out of this reporting season, one of the things that came out of this reporting season, is that the turnaround story du jour is probably
very French.
SAI Global.
SAI Global.
And funnily enough, the share price at this week is weakening. Which basically means that the potential upside.
Did you mention that a couple of weeks ago on the show? But you're sticking to it?
I think I did the first time I looked at the reporting season, so that remains the turnaround story.
Maybe Roger and David are mentioning.
Really?
It.
Oh, okay.
They could be.
I might have missed that one. I mean,
Why do you like it,
Warren Buffett famously said, the problem with most turnaround stories is they never really turn around.
Yes.
I believe that. Well, the brokers believe it, and it seems to be that this story is one that is turning around.
Okay.
If that's correct, then there's much more potential.
Have they reported yet?
Yes, and that's on that basis.
And what was the report like?
The report gave practically every analyst covering the stock the impression that they are turning around right now.
Okay, well, I must get the CEO on the program, see if he can prove it.
Exactly.
Okay.
Another stock which has been on my radar for a while is Flexi Group.
Okay, what does Flexi Group do?
They, in short, do consumer credit. So if you buy plasma television,
is that with a Z?
Harvey Norman,
consumer. Go on.
If you buy a plasma TV at Harvey Norman, and you buy it on.
Oh, that's Ned Monterello, isn't it?
WA.
You
probably know about it. Yeah. Well, they provide.
I wrote a story on him when he was a privately listed.
There you go.
Private company.
I mean, I think they still look good.
Flexi
They're
Group?
never really expensive. It's still positive. There's another stock which doesn't get that much attention.
Flexi Rent when they first started. I think
exactly. Flexi Rent, yes. That's
and they worked for Harvey Norman and places like that.
Yes.
That's Ned Monterello. Yes. I can get Ned on the show.
There you go.
Okay, go.
Another one which you may not necessarily know that well, maybe I'm testing here, I think the Adelaide based, and they were a transport company, KNS, you know them?
Spell it.
K from kilo, and en passant, S from Simon. Company code.
What did you say then? Ampersand.
Oh, okay.
Okay.
En passant. That's what.
Yeah, I know, but people. This is Australia, mate.
Okay.
So transport
KNS. And they actually, because they're not that highly valued, actually offer a dividend yield in excess of 7% at this point in time.
And they have a nice, solid business?
Yes. And I remember them a few years ago, they actually got into trouble because one of their staff members had embezzled a few millions out of the books.
Which can hurt.
And that almost put them into bankruptcy, yes. And they're obviously recovering now from that. And they should be looking quite good at this point. And undervalued.
Okay. What was
undervalued is the term there.
Yeah. What was the most disappointing result, which has meant you've said, don't touch this company?
And I'm going to be controversial now.
Okay.
Wesfarmers.
Wesfarmers?
Yes.
Okay, tell us why.
And you won't see it in the share price.
Richard come on the show soon.
No, you won't see it in the share price, but I believe there was a massive turnaround now in market sentiment towards Wesfarmers.
Turnaround for?
No.
Or against?
Against.
Okay.
And
are the analysts saying that you read the analysts? That's what FNArena does.
Yes.
But the share price is pretty good.
Yes.
But how far is it going to fall?
Well, how far? It can go quite a lot because what the problem with a stock like Wesfarmers, and potentially the likes of Invocare, and they have the same problem, is that the valuation is quite high. If now growth starts disappointing, then a derating can happen, and then you can talk dollars. Dollars can go off the share price, and it's the share price around $40, I think now. So if you talk, let's say mid-30s at some point, that is quite a lot. It's more than the dividend you will get from the stock.
I think I argued with Roger when it was about 28. And he told me there was too much debt. Yes, but it seemed to get over that little hurdle. Yeah, well, the debt's still there, I guess.
Yes, but
money's cheaper nowadays, isn't it?
The problem with debt, the problem with debt only. It's the same with Europe. The problem with that is only when there's no growth. When companies grow very strongly, that matters much less.
But Coles and Bunnings are pretty good companies.
Yes.
So it's just the mining side's probably letting it down.
No. It is the expectation that the better of the growth has already been achieved in Coles, and it becomes now tougher. And apparently, some analysts are now convinced that Woolworths is making a comeback.
Woolworths not.
It's making a comeback.
He's making a comeback.
So that,
but I can't see Masters doing anything. But anyway, that's for another story. In fact, next time we come on, let's do a Coles and Woolworths, West Farmers and Woolworths comparison.
Really? Ask what you would
people care about.
But anyway,
we do stuff that people care about, not what you care about.
No, that's true.
All right.
One stock that will have disappointed a lot of people, Metcash, is the same sector.
Okay.
A big disappointment.
Okay. Well, and then we'll talk Metcash. What the big three? All right, mate. Great seeing you as always. That was the controversial Rudi Filapek-Vandyck. After the break, we'll find out if the major miners are still a buy with Gary Stone. And Gary knows more than Rudi, that's for sure.